Hello and welcome to the second episode of the Bitcoin Lens podcast. This is today going to be a podcast about my concerns for the US dollar and the longevity and health of the US dollar in 2024. So with that being said, let me jump right into it. So the first point I wanted to kind of bring up here is the Saudi PetroDollar agreement that has expired on June 9th. This actually stemmed, you may ask yourself, where did this petrodollar agreement come from? What did this stem from? And essentially, this stemmed from the Yom Kippur War in 1973, also known as the Arab-Israeli War. So essentially what happened, you had the Arab nations having war against Israel here, and US basically supported Israel during this conflict. Now, this offended the Arab nations, and OPEC decided to place an oil embargo against the US. And this obviously concerned the US. So, the way they fixed this is they promised military aid and equipment in exchange for the kingdom investing billions of dollars of its oil sale proceeds into US treasuries. So, essentially buying up that US debt via the oil sales. Now, petrodollar, this agreement was actually established in 1974. And what this agreement essentially meant was that all exports of oil should have been settled in the US dollar. So this was established about 50 years ago. And this really strengthened the US dollar as well with, all the oil settled from exporting nations in US dollar. This kind of leads me into my second point. The BRICS nations or the BRICS Economic Alliance is growing rapidly, and they're dramatically slowing their trade of oil using the dollar. So we're seeing Russia, China, India. They're settling their oil trades in the Russian ruble, the Chinese yuan, and even India is also starting to kind of offload their trade of oil in US dollar. Now, as far as the growth of BRICS, there has been 97 countries. So initially it was Brazil, it was Russia, Iran, China, and South Africa. Now we have 97 countries that have actually applied to be part of BRICS, including Turkey, which is a NATO nation. And they are actually going to attend the BRICS summit in October, which is in Moscow, Russia. So this is kind of interesting. And this leads me to my point number 3 here, which is still regarding BRICS. Since BRICS is kind of, they're kind of collecting some steam in their growth here. Now, BRICS is also importing commodities at record pace. This is kind of my point number 3. And this is just more proof to me that they're trying to move away faster from the dollar and they're trying to de-dollarize faster. We're seeing a massive influx of gold to China, Russia, and other BRICS nations. I read the other day that Canadian exports was $589 million in 2023 to Russia and China, and this is up from 189 million in 2020. The predominant exports of that is going to China, but really it's not just China. It's most of the BRICS nations, most of the bigger BRICS nations importing gold. Now, in July, there was an announcement from China's Zijin Mining to take 9.9% stake in Canada's Montage Gold Mining Group. So you can see there's a huge trend here, massive patterns that, China and the rest of the BRICS nations are importing these commodities like gold, as well as some other things like silver as well, at record speed. Now, an important note on that, BRICS Summit is in October, like I said, in Moscow, and they are expected to announce a new currency. So that right there is kind of a key point and, something that concerns me a little bit as well, as far as like, is this the move away from the US dollar, or is this the start? Is this the beginning of the end of the US dollar as the global reserve currency? Who knows? I mean, this is just one move here, but it's a pretty big move, and it's a group, meaning BRICS, gaining momentum pretty quickly. So we'll see where that goes. Moving on to point number 4. So the U.S. debt interest. The U.S. debt interest is now the number 2 line item on spending for the U.S. budget, and it surpassed $1 trillion. So just to kind of put that in perspective, the US has now surpassed their interest spending on debt, and it surpassed defense spending. So defense spending was number two line item. The interest on debt is now the number two line item. It is projected that by 2051, it'll become the most expensive part of the budget, of the US budget at the current pace. Just to give you a little bit more perspective, 4 decades ago, the debt was 907 billion, and now it's obviously increased to 35, almost 36 trillion dollars that the US is in debt. So that kind of leads me into number five, which is these wars that we're involved in. So unless you've been under a rock the last 2 years, the US is funding Ukraine and Israeli wars with billions of unconditional dollars being approved in Congress. It seems like almost every week, every month now. And I believe if you took an instant poll from the average US citizen whether they would vote yes for all this unconditional funding, I think you'd have an extremely low number of people or extremely low approval rating on this funding. Now, there's obviously some strategic, advantages to funding some of these wars, especially with countries like Israel, which is a strategic ally. But honestly, if you listen to Congressman Thomas Massey, he was interviewed on the Tucker Carlson podcast, which is a really interesting listen. That specific episode where he mentions how APAC has such a stronghold on all the congressmen and women, where they literally have a buddy system. So they have a buddy system. So that's the American Israel PAC, which they have a buddy system and they have an affiliation. Each buddy is counterparted with a congressman or congresswoman, and they ensure that they get a favorable vote on all this war funding. So just to kind of give you an idea how these lobby groups work and how a PAC like this could have a serious impact on what we vote for. And this is kind of dramatic. Just as recent as yesterday, I saw the US offload $2 billion in Bitcoin that they seized from criminal activities. And then I also saw Ukraine got an additional $2 billion in additionally approved funding, which makes you wonder, like, what is going on here? Like, we're offloading a superior hard currency that's finite, that is widely adopted, for a currency that's being printed every day and expanding every day. So not only is this bad from a Bitcoin versus fiat perspective, but it's also terrible from a debt perspective, which, as I said earlier, the offloading of US debt from these countries is also going to be a big factor. So the dollar expansion, point number six, we've got an 8 to 12% per year dollar expansion. It is estimated to be. We're seeing things like inflation up 43% up. We're seeing home prices up like 20, 30%. And obviously we work on the CPI, the Consumer Price Index model, which, is right now is at 3%, but that doesn't account for food, gas, house cost. And this is really just not sustainable. So the monetary expansion for me is kind of a big issue. And considering it's about 8 to 12% per year, that's not sustainable. And, this is something that really is concerning to me. So, point number seven, the stock market gains. So, these are not actual gains. These are going to be nominal gains, and if you get 5 to 7% return on investment on the S&P 500, I believe at that rate, even optimistically looking at it, you're probably getting more of a negative. You're getting a negative yield of probably 2-3%. So that's really important to keep in context as you're looking at your return on investment on most assets, including real estate. Real estate appreciates so fast. My first episode on this podcast was actually about real estate versus Bitcoin, and I talk a little bit about this if you want to check that out and see what my true opinion is on real estate growth, and as a real estate investor, kind of what I think about that. But so yeah, so point number 7, the actual gains is very different than the nominal gains you see on your in the stock market and S&P 500, etc. Point number 8. So we're now seeing China selling billions in US debt and getting this off the books. So China offloaded a total of 53.3 billion of treasuries and agency bonds combined in the first quarter of 2024. So as I was saying earlier, BRICS combined with the offloading of US debt you're seeing now from some of the major countries like, Russia, China. Of course, when Russia invaded Ukraine, the US decided to seize their treasuries. So I think the rest of the world may be waking up a little bit, maybe the countries we haven't been so friendly to, and they're like, well, let's offload these treasuries, and maybe there's better alternatives, or perhaps we can come up with an economic alliance like BRICS and stand up our own currency backed by gold. Perhaps is what I'm expecting them to announce in October. So that is a big one. We're seeing that from multiple companies offloading, treasuries. What happens if treasuries get offloaded? That means we have to make our debt more attractive, meaning we have to increase the interest on the debt, which means we have to print more money because to pay the interest on that debt, we have to cover it somehow. And if everyone's offloading their debt, we now have to pay for it with printed money. So you can just kind of use your imagination of where that would end up. Possible hyperinflation. Point number 8, excuse me, point number 9, 63 banks in the US is reported to be pretty near to insolvency and facing roughly 600 billion in a total of unrealized losses as of Q1 in 2024. It's even increased since then. That was the numbers for Q1. So Christopher Wolf is a managing director and head of North American banks at Fitch Ratings. And I quote, he said, you could see some banks either fail or at least, dip below their minimum capital requirements and a possible collapse. That's what he told CNBC. So rising interest rates and slowing of a real estate market is also putting huge pressure on the banks. Of course, there's no mortgages being applied for because the interest rates are too high. And, failing means likely bailing. So these banks fail. We've seen historically, and we've kind of become immune to this system now where if any industry fails, especially the financial markets, the banking sector, we bail them out. And that comes back to my concern for the US dollar. We bail them out. How do we bail them out? We print more money, and now we've got more debt. We got to raise the interest on that debt to make it more attractive as people are offloading their debt. And now we're printing more money, and this could lead to absolute hyperinflation. It's kind of scary if you look at it that way. Point number 10, and the final point here before I go into Bitcoin as a solution, is the US real estate market is pretty stagnant this year. So 1 out of 3 home buyers are paying with cash in 2024. That is kind of concerning because this means essentially you're predominantly seeing a huge ratio of investors buying houses this year and not so much families or couples. And this is really concerning for the whole economy if the housing market's not moving and it's strictly investors. Not to mention how that's going to lift rents, not to mention how that's going to squeeze everyone else further with their dollars that they hold. So those are kind of the 10 points. Hopefully, those are pretty insightful as far as how Bitcoin can be a solution to all of this. I think, if you look at the last 4, 8, 12 years, Bitcoin beat performance of US treasuries, it beat performance of real estate. You look at stocks like Nvidia or the Magnificent Seven, the S&P 500, gold, silver. So it's just the performance has just been absolutely out of this world over the last 4, 8, 12, and 15 years for the whole life of Bitcoin. So, the first thing I'd say is why are we selling Bitcoin that we've seized from criminal activity? That's one solution. Don't sell freely obtained Bitcoin from criminal activity through ransomware and things like that. Another thing there is, adopting it as a strategic reserve currency or a strategic reserve asset would actually help pay off the debt, the 35 trillion in debt we have right now. And this could also help reduce inflation rates because it could require less printing of money. Now, at the Bitcoin conference last week, I heard, some politicians like Senator Loomis, Senator Deaton, RFK, Trump announce strategic reserves and how that could solve this problem. I even heard Trump say that he will use a strategic Bitcoin reserve, and his goal is to have 1 million Bitcoin within 5 years and use the proceeds from that Bitcoin to strictly pay off US debt. Now, that's really a solution I can get behind, and that's something that I really think would be a terrific solution for this conundrum we're in right now. Now, on a personal level, so, we, even though we got some politicians last week at the Bitcoin conference making some really big promises, I don't personally want to rely on that and wait on that. The current administration doesn't look like they've got any idea of, the benefits of Bitcoin, or they just don't, want to invest in it, use it as strategic reserve. I mean, you see it as recent as yesterday, like I said, where they seized Bitcoin, sold it for fiat. Makes zero sense to me. So this is something that's kind of concerning to me, and it's something that I'm going to keep investing in. I'm going to keep stacking sats to place that hedge against inflation, place that hedge against everything going up, all the prices going up. I mean, you look at, I know I mentioned this in another podcast episode, but you look at the prices of houses compared to the relative price of Bitcoin over the last 8 years, and it's mind boggling where you're going from 280,000 to 320,000 from 2016 to 2020. And then in 2024, the median house is now 430,000. You look at that relative in Bitcoin. 2016, the price of Bitcoin was about 664 for the median house in the US. 2020, you're paying about 64 Bitcoin. And then 2024, you're paying about just over 6 Bitcoin for a house. That is one of the big reasons I'm stacking. I was a historic real estate investor, but I'm offloading a little bit more of that now and putting that in a harder, better store of value that's got zero inflation and with all the other benefits I mentioned in that podcast. Another big thing on a personal level, remember this is just the beginning. You're so early still. The adoption is now only starting to really increase. We've got 11 US ETFs this year. Australia announced an ETF, London announced an ETF, Hong Kong announced an ETF, Paris or France just announced an ETF. So they'll be having an ETF here soon. You think of RIAs or registered investment advisors, they are actually not even allowed to approve or recommend these Bitcoin ETFs to their clients yet. So unless a client asks them about it, they're not allowed to push this on their clients or mention it. So that is something that still, as that approval process goes through for the RIAs, I'll kind of keep an eye on that. That's definitely going to change the landscape as well with all the baby boomers, retirement funds, the trillions of retirement funds from baby boomers sitting on the sidelines. Now, also remember, we're so early. We're roughly just over 1 trillion in market cap for Bitcoin. You look at gold. Gold is over 12 trillion. We're just about to surpass silver, but we're so early relative to everything else. Finally, that's pretty much what I think is the solution from a personal and from a nation state or even corporation level. And finally, Bitcoin is finite. It's 21 million. You stack today, you stack yesterday, you stack 4 years ago. Guess what? You still have the same amount out of that 21 million. The federal governments can't bail out with Bitcoin. They can't print endless stimulus with Bitcoin. They can't fund wars with Bitcoin. And they can't continue to play the global debt game with Bitcoin. So those are really my biggest concerns with the US dollar for 2024. Honestly, I want the US dollar and Bitcoin to live harmoniously together, and I really do think they can. But having said that, the trends and the patterns I've seen over the last decade or so doesn't lead me to believe that's going to happen really soon. Now, we'll say the Bitcoin conference last week did give me some optimism with maybe a new administration. We could see some changes in the right direction. But for now, I'm just going to continue stacking sats and, continue having that hedge against inflation and the current state of affairs. So I hope you enjoyed this podcast. Just to be clear, I'm not a financial advisor, and this is just my opinion, and this is just my perspective of my Bitcoin lens into the world. So I hope you enjoyed this. Make your own decision, make your own financial decisions, and tune in for the next podcast. We'll see you next time. Thank you.